Hey folks, how you doing here today? Hope you're doing well. It's Thursday, April 2nd. Let's do a trade review. I had some trades on the SPY today, and let's go over that right now. So first of all, first trade of the day was opened at 9:53 a.m. and it was a put credit spread, short the 240 put and long the 237 put. So that would be 3 points wide, and I opened it at 9:53. So if you look at the 5-minute chart, that would have been just about here during this sort of, I'm not sure if you can see that, this consolidating range right over here. So the thesis behind the trade now is because we were watching yesterday's low, in fact, on SPY and actually many other names. And you can see that we were pretty oversold going into that level this morning, and then we had an initial bounce. So the setup was based off of yesterday's low. And I was basically looking at how many names out of the broad tech sector and financial sector names are breaking the low, how many names are rejecting the low, and what are the odds that we're going to see a failure to break yesterday's low and attempt to move higher. Okay, so that's basically the setup, and that's pretty much what happened. So we moved up on the open, then we consolidated here. Now during this move right here is where I entered the trade, and I would have been risking based on the low of yesterday and the low of today. Okay, so I opened up that put credit spread there around 9:53, and I collected $75 in my account with that spread. And again, I opened the spread in a way where I'm also willing to scalp around it or hedge around it in the case of an emergency. So if SPY was immediately going to start breaking to a lower low after I sold the credit spread, I was more likely than not going to buy a put to hedge against that risk, you see. I'm a short-term trader, but I also love to collect credit from these markets because I'm realizing that that is probably one of the best strategies out there. So I'm fusing my day trading ideas with this idea of selling premium. So it was open at 9:53, and then the market was just grinding higher and higher and higher. Slowly, that is, okay? But there were a lot of moments where it looked like it wanted to reverse. That's why you had to be watching the financial sector and names like Microsoft and Boeing, which were giving clues, and also the IWM was giving some clues as well. So keep an eye on the Russell 2000 because there's some clues there for the broad market too. Okay, so always looking at Apple, Microsoft, Facebook, Amazon, SPY, XLF, QQQ, and advancing declining volume of the US stocks. Those are pretty much my indicators. And obviously volume, okay? A lot of the time when we were seeing declines here, there were some areas where the price was trying to consolidate on the short-term time frame. And what kept me in the trade was not only does the trade have a high margin for error, for example, the SPY could just chop around for an hour's trade and the trade will end up being profitable. Whereas if you're long options, that's not gonna work as well. What kept me in the trade was the fact that the bear volume was considerably lower than the bull volume on the way up. So that's what kind of kept me confident here. And so I ended up taking off the trade at 10:30. So we got this sort of move here. And during all of this right here, these 5-minute bars, it always looked like the SPY was about to reverse. And that's the trick behind it, is that so many shorts try to enter there and say they're trying to call the top or call the bottom. But in reality, when the market is in a sort of cycle like this, the odds are that it continues in the direction of the trend, right? So you can see that we changed the 5-minute trend, and you had to be watching what kind of money is flowing into the financial sector and to the tech sector to determine how likely it is that we continue higher, all right? So the tech sector was continuing higher, and it was more aggressively moving than the tech sector. So that's what kept me in the trade. And I exited around here, 10:31 was my exit, where SPY was just squeezing higher. So I covered that position for $41 and I opened it for $75. So that's a nice little profit there. Now, at this point, this is a really interesting idea that came up, is because we just pretty much skyrocketed into yesterday's high. And that right there was a good opportunity for a top fish based on yesterday's high. So it's funny that we got that. We got the failure to break yesterday's low, and then we got the failure of yesterday's high in the same trading session. So that's just, those are some textbook setups right there, and you see them afterwards. And all it took was to see how aggressively we were rejecting that level and how aggressively we moved into it. And I'll be completely honest with you, I was about to fill some put options right here on this third candle. When I saw the parabolic move, 2 legs up and followed by 2 inside bars like this, that was when I was starting to get interested in some puts, but I didn't fill them at that point. But the setup was there, I just didn't act on it. So it was the top fish against yesterday's high. Now again, after that, I did scalp some puts with the objective of it being simply a scalp, nothing more. And look at the VWAP on the SPY, and we saw, based on how aggressive this move was, I was watching the price action and I was going to say, what is more likely? Is it likely that we break to a higher high, or is it likely that we continue to consolidate in this lower high fashion? And that's what we ended up getting, sort of. So I entered some puts at 11.07 here, okay? So you can see we consolidated once, second leg down, caught the moving average, came up and failed to make a higher high. That's when it started to catch my attention. So I got into some puts on this bar right here, on this inside bar. And obviously we consolidated, came back up. And I was watching it here. Obviously, if we were going to break above 251.20, I was going to cut that trade, because at that point we break the lower high pattern and we break to a higher high, which would pretty much put pressure on shorts who entered, who tried to short that. But there wasn't enough buying pressure up here to keep the price going up. The institutions were not buying up here, that's for sure. So I stayed in the puts, healthy consolidation, and I exited right around VWAP, which would have been just under 249 on the SPY. So I'll show you that right here. I'll show you my trade log. So you can see there, bought. I opened up the put credit spread for $75 at 9.53, closed it at 10.30 on the SPY parabolic move, and then this was the later scalp trade at 11.07 where I filled some puts at $39, and then I waited around a little bit in the trade. They went to 35. And I was just kind of watching the price action. Like I said, I was ready to cut it if we were going to break to a higher high. I exited at $45, then at $46, and that was at 11.26, 11.28. I wasn't looking for much on those puts. And as you can see, once SPY bounced off the VWAP, it didn't look back. You see, I exited right here at 11.25, 11.26, right on the bounce of the VWAP. And it didn't look back since then. So that was a good scalp. And that's just the moral of the story, is that you can't be getting greedy, especially with scalp trades. If you're trying to scalp the markets, you have to be getting in where it's like a 90% chance or between a 70 and a 90% chance that the market's going to move in your favor. But you can't be looking for much from the market. And that's part of the strategy, okay? When you take a credit spread, you have a lot more leeway in the trade. But if you're scalping the markets, you need to be more precise with the entry. But if you're quick with your hotkeys and you're quick with analyzing and understanding probabilities in the market, generally you can win more often than you lose. It's just about keeping that managed. Okay guys, so I wish you a great day. I hope you learned something from this video, and keep that risk managed. Take care.